Michelle Morgan here with a trade review process of a trade that I entered today. It was a buy on the Great Britain Pound JPY off the 15-minute chart. So as we can see, prior to getting into the trade, there was heavy volume here. This was at 4:45 a.m. This was after a speech by Bank of England Governor Carney. Yes, speech. So his speech came out at 4:30, and at 4:45 there was huge volume, downward momentum, downtrend. So I noticed here at the bottom, a tweezer bottom had formed with the bullish sentiment happening, breaking the 176.4 resistance line. But before I was going to enter the trade, I wanted to get confirmation of this particular candlestick to confirm that in fact it was a reversal in motion. So when the second candlestick formed here, and so once the candlestick opened above the 176.4 fib line, I entered into a trade here, into a buy. Now, something that I noticed was that the next fib line was very close, and I know my take profit and stop loss is 7 pips, and so I did give it 7 pips, what was just barely above the next fib line at the 150, the next level of resistance. And so I did that, and to me price action was showing that I was going to hit that, because it did hit it up here as well. Now the only issue is that with 7 pips here was that I didn't give myself a lot of room to breathe on the stop loss end of things, and so that would have been my only issue, which was my issue here. So giving it 7 pips, as you can see here, it doesn't really give the trade a lot of room to breathe, and even with the entry price of 7 pips and the stop loss of 7 pips, it technically would break without even coming back out of this entire candlestick. So it would break while remaining in this candlestick as well. Okay, that was a screenshot that I was sharing on my trade review process for the Great Britain JPY, but I also want to share it on the actual MetaTrader 4, because I feel like I can explain it a little better, and then I can also see the outcome of the trade as well. So because, and I have the dash line set up here that show that are showing my take profit, my entry here on a buy, and then my stop loss. So as you can see how close they were together when my trade actually exited from the trade, it was still in the current candlestick. So 7 pips wasn't really enough space to give my candle room to breathe, especially because the stop loss was still in the body of the current candle, which, unless there's heavy volume, that would have been bullish, heavy volume, then that would have been okay. But in terms of this particular trade, it wasn't moving very fast, and it was just a confirmation above the resistance fib line that I do need to be more weary or aware of that, and making sure that I have enough space to breathe, because as we see here, the price did continue to move up as I predicted it would. I just didn't give myself enough space to breathe to actually hit the take profit, because we can see here like 1 or 2 candlesticks after the trade, after I entered the trade, they hit the take profit. It's just that I did give myself enough room to breathe here. So in that case, I could have lowered my take profit maybe to this fib line here, or I could have actually put the take profit to the 123.6 fib line, because I do figure it hasn't growing upward momentum, so that would have given myself more room to breathe. So here, if I would have entered, that would have been 25 pips, and the stop loss on 25 would have been down here, so way below like where the tweezer bottom formed. So This one was more of a learning process, and don't make my stop loss in the middle of a candlestick of the body, especially if it's not going with heavy, strong volume happening in place. And then as you can see right now, clearly the take profit would have been reached at where the current price is. So live to trade another day, but my stop loss closing out because I didn't have enough room to breathe.
Hi, Michelle Morgan here with a trade review for a trade that I did today on the Great Britain Pound USD pair using the 15-minute chart. It was a sell that I got into, and I woke up at 4:30 a.m. Pacific Standard Time, and I noticed that an uptrend had been forming overnight, and I saw that a tweezer top had formed here as well just recently. So I knew that with this tweezer top forming from an upward momentum that had been happening, I was looking to get into a sell. And I knew that I was going to get into a sell when the candlestick broke this fib line at 0.0 of support. And then also, before I get into my trades, I also take a look at the hourly chart as well, so I can get a broader perspective of what is happening. So even when I look into the hourly chart, I noticed here where this candle, this wick is, it was a high. And I can see that this high is also a high that's happened within the last time this price action was this high was last week on July 26th, which was a Thursday. Even from last week, there was downward momentum, went into consolidation, and then even this hourly chart shows an upward trend that happened. A tweezer top forming, and looking here, I got in at the beginning of this candlestick where it was going to form a downtrend. So going back to the 15-minute chart to go over how and why I got into this particular trade and how I set my take profit and stop loss as well. I noticed here that when I woke up, price action almost hit this level of support. But then I also saw where this next candlestick that happened at 4:45 a.m., it did break the level of support, but it closed high. It closed above the fib line. So for me, that wasn't a confirmation to get into this particular trade. So I was going to wait for another candle to confirm confirmation of passing this particular fib line of support. So when this current candlestick that I got in on, at 5 a.m. happened, I noticed that it had strong volume. And in my trading strategy, it has to have at least 7 pips of strong volume, passing a level of support or resistance in order for me to get into the trade. So when I look in here, and I started from the time that the candlestick actually opened. So when the candlestick opened to where I enter the trade, it's 8 pips. So I entered into this trade knowing that I wanted to get into a sell because of the tweezer top that had formed coming off the uptrend. So I got in here. My the next level of support, where I was going to originally set my take profit, would have been 9 pips. So then it would have been a 1-to-1 ratio. So going from there, so 9 pips, looks like it would have been right around where the candlestick that I got in on the trade opened. And so I looked at that like that's not giving myself enough breathing room in order to let this particular trade develop and reach my take profit. So I looked below to the next level of support, and I saw this horizontal line here, which was another level support line that I had drawn out. I did see where, looking over here, this was a price action that it did hit. And so for me, knowing that it confirmed to me as to have this take profit set down at this next level of support because price action has hit this line in the past. And knowing that it was good to give myself breathing room because it was a high that it's reached recently, it also gave myself enough breathing room from a recent candlestick where that wick kind of hit this level of support or resistance at 1.31712. So it gave myself a little bit more breathing room to see that in order to have the price action come back down and hit that level of take profit.